Hey, everybody. Welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick. Welcome, everybody.
There you go. You're gonna learn this eventually. We will be your hosts for this afternoon. This is a new live stream, which I think is going to be a fantastic live stream where both of the main faces that you see on YouTube get together once a week and we talk about what's happening. And for the afternoon, what's going on in the market and, what action is going on. So if you can hear us, by all means, please respond in the chat and let us know where you're tuning in from. All right, let us know where you're tuning in from. Roy says, do you ever think we'll get back in tech? At some point in time, I think so. We'll see. All right, so Stock Time is here. Harry is here. Harry asked Patrick a question about Watchdog. A lot of the things, those outside things that we have within the software, we don't talk about here because not everybody here is a subscriber to the VectorVest software. So we don't want to give everything away without you being a subscriber. Hopefully that makes sense to you, Harry. All right. If you're brand new to the channel, by all means, please hit that subscribe button, hit the bell icon so you'll be alerted when new content like this comes out. And thank you all for supporting VV Nation, both myself and Patrick, in the live streams and the videos that we put out for you guys. And if you're still new to the channel as well, this is not all we do. We don't always do just live stream. Patrick and I look at a lot of things that are going on in the market, and we put out videos pertinent to what's going on in the market. So don't forget to take a look at everything that we have on our channel. And if you find a video that you like, that you really, really like, tell me what you like, what you really, really like. I want a stock. I want a eeny, meeny, 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 miny, miny, mo. Well, whatever. If you find a video that you really, really like, don't forget to share it. All right. And hit that like button. Hearing you loud and clear from the Philippines, and I am a channel and mobile subscriber. I loved the Philippines for the time that I was there. I loved it. Miss McClintock is here from Southern California. Kobe Grill is here from Israel. I love the reach that we have all over the world. So that's just a great thing. Stock Time is in Pittsburgh, just south of Pittsburgh. And Scott's laughing. Oh, wow. Why are you laughing? Because that's what you get some fun here. I'm going to do some Spice Girls. You got to do some Spice Girls. Well, you don't really have to do some Spice Girls, but you know what I mean. All right. A lot of news hitting the market today, Patrick, yes?
Yeah. Really one main headline seems to be taking everything so far. I guess everybody's over Elon Musk wanting to buy Twitter, so seems like we're on to the next FANG stock here, if you will.
And that next FANG stock is Netflix. Big story. It's all over the place. So that's going to be one of the stocks that we take a look at. As a matter of fact, let's do this. Let's talk about some of the news that's out there. And I'm going to put that on. I put the wrong one, didn't I? There we go. Which one do I need to hit for the both of us?
You don't have to hit this one, but it's down here through it.
Okay. I need to have that on here. I don't.
You just need to learn how to use a computer, Glenn.
Wow, I already know how to use a computer, you jerk. All right, so
ask Joey to do it for you.
All right, so and the cool thing is that me and Patrick sit offices right next to each other. We can actually bang on the wall and talk to each other, which is kind of cool. So here's some stocks that were making the news pre-market. And you see the first one here, Netflix. And the big story about Netflix was stock dropped 27% after the streaming giant reported a loss of 200,000 subscribers. The latest number I saw, and back, Patrick, if you can help me out on this, the latest number I saw is that they have 214 million subscribers. That's a lot of folk. They got 214 million. You have a different number?
No, I saw it looked like it peaked right around 222 million, I think.
That's a lot of folks.
And the interesting thing I found, was their numbers they report. Everybody's worried about the whole Russia thing, and they only had about 700,000 that they lost from that. So, I guess most of the users are just U.S. based.
I don't know. I can't say yes or no to that. I can't say yes or no to that. But that still is a lot of subscribers. That's still a lot of. But you look at it on the basis of 214 million. Is that now still a lot of subscribers? Isn't that like 2%? I don't know the math.
Less than 2%, I believe.
Yeah, so we're sitting back and we're saying, "Wow, that's a lot of folks." Another side to this is Netflix drops 32% on track for the biggest fall in over a decade. That's huge too. All right, so I think that's why the story is taking precedent in what's going on in the market today. That's the biggest loss in 10 years.
But then they're also predicting another 2 million subscribers lost. I forget the exact time frame, but over the next year or so, I think it is.
What are they attributing that to?
Who knows?
Right.
whatever they want to claim there at that point.
All right, so I'm going to ask you, one thing I'm going to say is that there should have been no surprise to this. Would you agree with that?
Yeah.
All right, I'm bringing up the VectorVest software, and if you are not, I did it again. I'm sorry. You got to, that's what's on my thing.
Joey, can you show Glenn how to use the computer, please?
Whatever. And, my deck stream, my stream deck is a little different now with the both of us. So Joey says I don't need that, but I don't know. So couple of things. If you are a VectorVest subscriber, you could have seen this coming. If you're not a VectorVest subscriber.
You didn't need to push anything.
Oh, how do I didn't need to push anything? Oh, okay. Anyway. By the way, Joey is here. He's here in person today, sitting next to me. Say hi, Joey. All right. Okay, so couple of things. Let you point out some things before I point out some things. And you should have control.
I mean, I think the chart speaks for itself. We saw the run from the pandemic, the COVID pandemic. You saw the run up there. And then all of a sudden, everything started slowing down. People started actually getting out of the lockdowns. People started going out more, spending more time outdoors with family, going and visiting people. They don't have time for it. Netflix is increasing their prices left and right. So, of course, that's going to be one of the first things people drop, especially with so much competition out there now.
There you go. You touched on a few really good, poignant points. Do you have Netflix?
I use a family member's. I don't know if I can say that online.
You can't say that. You gotta
I don't
that.
have Netflix.
You can't say that. They're coming after you. I have Netflix. They raised my prices. I still have it. So some of the things that I'm looking at it from a graphical perspective, VectorVest gave Netflix a sell on January 5th of 2022. At that time when we gave it a sell, the stock was already trending down. Patrick was right. During the COVID, during the lockup, I think that all of the stay-at-home stocks, and I think both of us have done videos on what we call stay-at-home stocks, and like Peloton, like all of the streaming places, and you know what else? All of the food delivery stuff. Grubhub and DoorDash took off. All right. So now that we're getting out of the house, I think that less and less people, as Patrick said, they ain't got no time for that. But looking at it graphically from a VectorVest perspective, the stock has been overvalued for a long time. Our mantra is always to have you in safe, undervalued stocks that are rising in price in a rising market. But normally when a stock is overvalued, and value is what we feel the stock is worth, it's an intrinsic value. It's based on a few things like earnings and earnings growth rate. Stock stayed overvalued for the majority of the time, and normally price falls to meet overvalued stocks and rises up to meet undervalued stocks. So stock overvalued. I've got a 20-day exponential moving average. Stock got me out a couple of times earlier than even the sell recommendation. Relative timing on the stock crossed over. That's when we know when a stock's in an uptrend or not. Above the value of 1, based on the scale between 0 and 2. Above the value of 1, the stock's in an uptrend. Below the value of 1, stock's in a downtrend. Look at that. RT went down below 1 on 11/30/2021. We just did a video on our channel called The Near Perfect Indicator, which utilizes relative timing. If you haven't watched it already, go check it out. Some of the power behind the VectorVest software when looking at stocks like this, where this happens, the earnings not so good, it really wasn't a surprise if you're a VectorVest subscriber. Twice earnings has fallen. Look at this back here in the last earnings report on 120. Big drop in earnings. The stock's price tried to go back up. Relative timing never got back above 1 and did it again. Not only this drop again, and as Patrick always likes to talk about from a technical perspective, we got a lower low. You know what about this low? I'll put this on a 5-year graph. I thought it was the lowest it had been. Oh, I'm looking at weekly now. Let's go put this back on end of day. Put it on a 5-year graph. Look at that. That's the lowest it's been in 5 years. The other previous low was 139.27. Oh, no, we're not there. Right now, we're still trading at 221. So we're not at an all-time 5-year low, but we're getting close to it. So there's a lot that's going on here. Some of the reasons why Patrick talked about it, competition. How many other things do you have besides Netflix, Patrick?
I mean, we got Amazon Prime.
Yep.
That's included with, the Prime membership anyways. Disney Plus is...
Got that.
But I mean, really, we don't even really watch Netflix that often anyways. With the kids, the only thing we really watch on it is the kids version of it so they can watch a few shows every now and then.
Okay.
But I mean, there's so many different other opportunities out there.
Roku.
So many different other options that don't even cost anything for kids that, we don't even really go to Netflix all that much. So
There's a lot of stuff on YouTube for kids, isn't it?
Yeah, as a parent though, you got to be careful about the stuff on YouTube. I've seen and heard the horror stories on that, so
Okay.
I stay away from all that. I haven't taught the little one how to use Netflix or use YouTube yet.
Okay. HBO Max, as Steve said, is another one that's out there. There's a lot of other streaming services out there. So competition is big. Raising the price. Why? Because inflation is an issue. Another thing, and Patrick is right about this too, content. How many times do we come around here talking in the office asking about, what you looking at? What you looking at? What you looking at?
I mean, the last big name from Netflix that I can think of was Tiger King, and that was during the lockdowns. So,
Yep.
What has there been since that point? So that's been 2 years ago now at this point, since the last one that everybody was talking about?
But everybody is scrambling for content. Everybody's trying, and this is a very competitive field, and everybody's trying to come up with content for people to look at to keep them interested, right?
But the thing is, Netflix is also pretty much priced themselves out. If you look at the competition, you look at Disney Plus, you look at the HBO Max, you look at those are anywhere from $5 to $10 a month. What is Netflix now? Netflix is at least 12 to 15.
I don't even know. I just get billed for it. I don't even know. My
Exactly.
wife yells at me for that. She's like, what do you pay for? And I'm like, I don't even know.
Eventually, they're going to price themselves out. If the best ideas that they can come out with is trying to ban sharing accounts and trying to increase their rates, that's just not a recipe for success. And I think we've seen that with a lot of the FANG stocks, I think that's why you see Facebook, which could possibly have another earnings miss here coming up soon. But that's why they're trying to make that pivot, because the Apple restrictions they put on their phones block some of that ad content or ad revenue now. And I think we're starting to see, the stocks that are going to stick around are making pivots at this point, and the stocks that are kind of comfy and set in their ways are dying off, kind of like we're seeing with Netflix. So
do you think any of these become buyout prospects? And I just put it out there. I'm just thinking, do any of these become buyout prospects at some point in time? I don't know the answer to that.
I don't know buyout prospects, but I could definitely see the case for taking them private.
All right. So, I see Stock Time. Yep, Stock Time says lousy content on Netflix now. Tyler says Cobra Kai. Is Cobra Kai on Netflix?
Yeah.
Yeah, but you know what I hate about these seasons is that you got to wait so long in between watching. Then you binge watch them, and then you got to wait so long. You know, I'm waiting for Yellowstone to come back
Netflix
out.
Definitely has the best interface, especially compared to like Disney Plus.
Okay.
You know, the way that it automatically skips the intros, the way it automatically ends at the end of the show instead of having to watch all the credits.
You can automatically click to go to the next episode.
Yeah, it's definitely the most efficient and most user friendly. But yeah, I mean the content is kind of lacking. You know, that what do you watch? I mean, yeah, you've had a few shows that have been okay, but like we were talking about a second ago, you don't hear anybody talking about the new shows that are coming out that they're really excited for.
All right. So let's put this all up in a big bow. If I'm looking at the stock right now, couple of things, and I'm going to preface it this way. Couple of things. One, the stock is undervalued. And two, the stock looks attractive because of its recent low price. So, would you buy it now? Yes or no?
No.
Absolutely. And I'm going to say the same thing too.
So let me ask you this then, Glenn.
Yeah.
Because it's a FANG stock, FANG Plus, whichever index you want to go with or look at, do you think it's time now, after two big earnings misses and a decline, do you think it's time to take them out of the FANG index because they're not, would you consider it a growth stock anymore?
No. Well, yes and no. So do I want to take it out of the FANG stocks? Probably not yet, because the name still garners a lot of people. So I'll say it from that perspective. It does have a high relative value of 1.52. All right. And even when it dropped before, and, you know, relative value looks at the stock's ability to outperform the stock market. But if it continues to underperform, it's going to affect that relative value. So I don't know if I take it out just because it's Netflix. That's, you know, does that make sense? Just because it's Netflix. I don't know if we take it out. But at the same time,
though, is it time to, I mean, how long has it been in the FANG index? Since what? When was 50,
I don't know
2015,
when the FANG was
2016?
Made. Okay.
And I mean, the FANG was created as a growth basket, and you know, if they're not a growth stock anymore, that's hurting the rest of that basket. And as we've seen with ETFs over the, you know, throughout the COVID crash and throughout the last 10 years, because all these stocks are so bundled together nowadays that, you know, one bad apple can hurt everybody else. So
I went back. I'm looking at that time period. Trying to find the early 2016. All right, early 2016. Let's go. That's 12/21.
And also keep in mind the split, because I mean, this stock has been $100 to $200 for as long as I can remember.
All right, so it split back in 2015. Here's the split.
Yeah.
All right, so even after the split and the price is split adjusted, is it still higher than? And is it still higher than than its inception into the 1/4 of 2016? Let's just start it off the beginning of the year. Price was a 109. The price even today is sitting at 222. It's still higher as a FANG stock, but it's had a rocky ride. So my opinion is, do I take it out of the FANG stocks? Probably not yet. It's got two earnings missed that affected the stock adversely, and it's still Netflix. And there it is. Somebody said about Kramer. Kramer said on January 13th, yeah, I'm going to get Kramer involved in this. Kramer said January 13th of this year to buy it, and the stock got smoked. But even before,
Kramer, when it was trading at $500 a share.
Yep. And even, you know, since that time, even when Kramer said, yeah, go buy it, we had already had a seller recommended. So
is this the next Bear Stearns moment for him?
It could be. It could be, bro. It could be, bro. It definitely could be. All right. So I am asking out there, type a 1 in the room if you think that even at this low point that is presenting you with an opportunity to buy. Type a 2 in the room if you agree with both Patrick and I that this is not the right time to buy. Maybe it should be tag stocks, T for Tesla, and take out Facebook and Netflix.
So Scott, that actually, Tesla's in the FANG Plus. So you would still keep the main core 5 holdings. You'd have to take one of them out though. You'd have to take Netflix out. But I mean, the FANG Plus, which has been the extra addition of Tesla. I used to have all of them off the top of my head. Tesla, AMD, Twitter.
How many? It's 5?
Alibaba. Yeah, there's Alibaba and hold on. I got it. I may have it here. Let me check. Where is it?
I think a lot of people may not know about the FANG Plus part of it, which is good.
So it's Tesla, Nvidia, Twitter, Baba, and Baidu make up the plus.
Look at what Magic Trade says. Has Cramer ever gotten anything right? And you know, Cramer's getting a lot of flack from retail investors because he shot them down so much. And it's interesting, as I look at my Twitter account, I watch him complain about all the venom that's coming his way, but then everybody's telling him, then why did you beat up on retail investors so bad? You deserve it. So listen, this is why I try not to be fanatic about nothing for that reason. It's just tough.
Man, my dad taught me from a young age, the best way to watch the news is with the volume all the way off. I mean, and I've seen the videos out there of Cramer's interviews where, you know, he's talking about his hedge fund days and how he would pump stocks, and that's just the, you know, his daily routine is pump stocks and sell it off and take advantage of retail. So,
and that sucks. That goes against everything that everybody on this channel, on YouTube in general, should do. We should be here to educate folk, to teach folk, not to take advantage of folk.
He's King P&D, so
all right.
I can't wait till cancel culture gets a hold of him.
Oh boy, it ain't that far, bro. It ain't that. But again, he's a big name that's been around for a long time. I don't know if cancel culture can really catch him. That's my opinion. I don't know. All right, so we did a lot of detailed information on Netflix. I still love the idea that it shouldn't have been a surprise to you if you're a VectorVest subscriber. Pointed out a couple of things. I've got a 20-day exponential moving average. I'm not even putting a bunch of technical stuff on here. Relative timing, when it was above 1, the stock was trending up. When it went below 1, it trended down. The recommendation being a sell, and when we gave it, the power of the VectorVest software is there for you if you are not a subscriber. We always offer 99 cents for a 30-day trial to the VectorVest software. If you go to www.vectorvest.com/YT, no matter what talking head is on TV, you can get real analysis to help you make the right decisions at all times. Don't get caught up in all of the talking head stuff, right, Patrick?
Yeah. And so, Glenn, let me finish off our Netflix conversation with one question for you.
Sure.
If there's one thing, if you were on the board of Netflix, and there's one thing you think you could do to try to turn things around, what do you think it would be?
With
your one idea to try to turn Netflix around?
Drop the price back down. But that hurts my company from an earnings perspective. Or give out better content. Well, then you got to spend money for people to put out content. I mean, that's a couple of things. What's on your mind?
I mean, I could see similar to what Facebook is doing, where they're, pivoting in towards more of the metaverse stuff. They realize their older business model of selling ads is starting to die off. I think, seeing Netflix go into some type of pivot where, they use their content, but they try to fit and they try to change their product a little bit to add more value to it. I haven't figured out exactly what, they could do, but like we've seen with a lot of these big tech giants, take Amazon, for example, they branched out into every single area of the market. Tesla branched out to transportation, all over transportation, and clean energy. I think if they're going to try to really ramp growth back up and still want to be considered a growth stock, they've got to add more value to the stock and not just be a one-dimensional stock.
I'm with that, because if there is no value add, then what value is it to me? Why do I want to spend my money for it? I'm just dumb. I ain't gonna lie. And because I don't want to cancel, that's just me. But you're right. As a person who's paying for it, what value do I have over anybody else using Netflix? Just that it's the Netflix name. They can't ride those coattails forever, can they?
No.
And
especially with inflation going up.
Yep.
People are going to start cutting costs eventually. While the numbers don't really show people are cutting costs quite yet, people are, taking the brunt of the inflation. Eventually that's going to catch up. And when people start to look at their budgets and cut, the unnecessary things, I think an expensive Netflix subscription is going to be one of the top things that goes.
I like Chris' comment says Netflix needs better content. Look at Amazon and Disney acquiring other media companies. What content has Netflix bought? Anything come across? What content have they bought?
I mean, they have some deals with, I think, Sci-Fi Channel, AMC, like, how they have The Walking Dead. They have a few of those, but I don't know if I don't think they're exclusive deals. But I mean, then you look, and one thing we haven't even talked about, Apple Plus.
I got that too.
Apple Plus, their whole game plan is to buy the most expensive actors out there, the most name brand actors out there, and put them in a few shows to try to generate buzz that way.
Well, the thing about Apple Plus is, though, and you want to go watch something, you got to pay for it. There's a lot of pay stuff on Apple Plus.
But I thought, is it not just a paid subscription?
No, I got a subscription, but even with this, I still got to pay for crap.
Really?
Yeah.
All right. So
I think it's racially motivated.
Puts on Apple. Okay.
Because you're like, I ain't got to pay for it. Why I got to pay for it then? Whatever. All right. Netflix have a lot of international shows. Well, if the international people are not making up a lot of the viewers or the subscriptions, does that really work out for you? I'm just curious, Mimi, because Patrick asked the question about, how many people they were losing. Were they American, in the U.S.? And I don't have an answer for that. But if they're making international shows, how many people do they have in the international world that's watching it? I think that's a number that I would have to go see is what because I don't know how many of us are going outside of, what's here in the United States to go look at what's internationally.
And
Foreign
I'm sorry, when I'm done for the day,
57% of its business? I didn't know that. Did you know that?
57% of business. I mean, that has to be mainly just Europe then, because the numbers from Russia don't back that up. It's only 700, not even 1 million subscribers to the whole country of Russia.
And remember, we're talking about they got what, 214 million. Foreign is really 57. Knife Man, I don't know about that. I think I got to double check. That's a lot of percentage to say that it's international. I got to peep that out.
And I'm sorry, with the international shows, when I'm tired, I got the kids to bed, I just want to toss on a show and kind of relax for a few minutes before heading to bed for the day. I don't want to read subtitles the whole time.
Yeah, that's a pain. Even though I love martial art movies, but it is cumbersome to have to watch the subtitles. And I don't know. I don't know. It's mostly being consumed by U.S. shows like K-dramas, and they just got anime. I am not. And even on anime, you got to read subtitles. My son is big in the anime, and I'm looking at it, and I'm like, OMG, how do you watch that? And he's like, dude, this is great. And there is an anime society out there that's so huge. I just don't want to read the subtitles. Don't want to read the subtitles. All right. I think that we talked about Netflix to the gill, but I think that it was well worth it, being that it was such talked about in today's market today, to do it that justice. You agree?
Yeah, I think so.
All right. Let's get back to what other stuff is going on in the market and go back. Here's where I found out how many subscribers they had. 2021 quarter three, 214 million. I think we did enough with that. So now here's one that that Patrick wanted to talk about today. Tesla earnings likely clouded by Shanghai. Talk to them about it, Patrick.
Well, I mean, we've seen one of the big FANG stocks take a big hit here today. The next on board is Tesla coming in after hours. You know, it's going to be interesting. I know that they keep talking about the Shanghai factory, and you know, there's a lot of go and stop going on still in China with their zero tolerance policies, that kind of thing. But I mean, the main thing is going to come down to sales. Are they still keeping their numbers up? Are they still getting new vehicles out? And I think, you know, yeah, that's going to be a factor, but that's something that they can't help anymore. At this stage, it's time to move on past that. Some countries are still stuck in that phase. So I think the main focus isn't going to be that, because I mean, obviously, you know, that's out of their control. I think the main focus is to look at numbers. Are they turning a profit? Are they meeting their expectations? You know, are they getting the cars off the line, and are they selling them?
And I think
that's what it's going to come down to.
As you look around the board, they're going to keep on, I think, hitting record sales. They're going to keep growing. It's the big boy in the space, and EVs are picking up steam. We've done a couple of videos on that on our channel as well. I think that it is not going to go away. Is it going to replace gas cars like right away? No. But more and more people are getting on board, especially with the push hike, however you want to call it, in gas. People are looking at them. Now, these cars ain't inexpensive, but they do have less expensive models that are out there that are not Teslas. Chevy's got one. You got the Prius. There's a lot of EVs that are becoming more affordable. They may not look as good as a Tesla. They may not look as good as a Lucid or a Rivian. But you know, if I'm saving my family a lot of money by going with an electric vehicle and not having to pay for gas and just plug it in, I may have to put a bigger outlay of money to buy the car. But I did a video on this where the long-term upkeep of an electric vehicle is a lot less than a gas-powered car. And
I mean, it is, but it's more one-time costs rather than spreading it out through a life cycle. Because what is the cost of replacing the battery system after the batteries start losing their charge?
So you do know that they were warranted up to 10 years and 100,000 miles.
Yeah, I also saw the article of the guy who burned his Tesla because he found out it was going to be like $26,000 just to replace the battery pack on.
Yeah, now, was he not in? Now, I did a video on that specifically. Most people, when they get to that time period, you think they're going to keep that car and have to incur that cost? No. 10 years is a long time, bro. 100,000 miles is a lot of miles. And as long as you can come back to that dealership within that warranty time, it's no cost out of your pocket. The video shows that. The numbers show that. And the reason why there's not a lot to go on replacing the batteries, because we ain't there yet. These cars that are out there haven't gotten to that past warranty time. So I hear you. In the video that I did showed it's super expensive to replace a battery. The other side of it is it's got a way long warranty period. 10 years, 100,000 miles. And if I'm getting close to that and I don't want to replace my battery, I'm getting rid of it and go get another one. So that's my argument in regards to that. And you're not finding a lot of stories out there about, you know, having to go replace batteries yet, because most of these cars haven't hit that 10-year time period yet. Not yet.
And I mean, I don't know. I agree with the electric cars. I think that's a good way to move forward. I just am not completely sold on, one, how they're going to dispose of the cars once people don't want to buy them anymore. Or once, the car's been used so much that it dies and you just have to get rid of it. And two, the cost to the the environment essentially to build one of these electric batteries and to build these cars. I think there's still a lot of things that need more streamlined and need solved before it really takes that main stage.
Do you not think that Tesla's already in that space?
Well, I mean, I watched the Tesla call last year when he said, that's what they were going to start doing, is they're going to start controlling their whole supply chain and start developing their own supply chain. That way they're not dependent on any third parties.
Okay.
So I think, waiting to hear the updates on that, seeing what he's going to say with that, and seeing how that's going, I think that needs to be done. But at the same time, I mean, you look at the pictures of all these mines and all across the world that are just huge holes dug out of the ground to get these, precious minerals and stuff that they need. I mean, what's the cost? You have to balance the whole environmental cost to produce one of these cars.
I think people have been asking about, a video from us talking about the disposal of these batteries. I haven't come up with enough to bring up a story or a video on it just quite yet. Still looking into it. All right. Next one, and I'm gonna blow through this one because this is beating a dead horse. Elon Musk threatens to cut Twitter board members' salary to zero as his takeover bid morphs into a referendum on the company. And then they talked about the poison pill. I'm going to ask one question about this. Poison pill, good or bad? I'm going to start off. I'm going to say it's bad. It screws the investors in the company.
I think it's bad just because the board members, I mean, there's more people who have their shares put into their name for GameStop than own shares than the board of all of Twitter. So
what's that got to do with the price of tea in China?
Huh?
What's that got
Twitter,
to do with anything?
I'm talking about Twitter. Their board doesn't even own shares of their company.
Oh, okay. I got you.
They adopted this policy that's going to affect their shareholders when they're not even real shareholders. They don't even own any actual Tesla. Any actual Twitter. They barely own any Twitter shares at all.
So the other side of that too is the board seems like it wants to make the decision on what they want to do with Elon Musk. Shouldn't it fall into the hands of the investors who have the voting power?
Exactly. Put it up to a shareholder vote, not a board member vote, because the board members, they don't have any skin in the game.
Yeah.
You can't make decisions on that without having some skin in the game.
Yeah, I agree with that 110%. All right. I'm going to another story of yours. In Servco.
Yeah, so this is one I found in the Jockey Club a few days ago. It's been on my radar really all week long. Interesting one, obviously comes from oil companies. And as we know, petroleum oil has been a major player as of late, really over the last year and a half, 2 years almost now at this point. But the stock has been taking off. It's been a fun stock to trade intraday, but from a longer term perspective, more of an aggressive perspective. They have 71%, I think, year over year growth is what they're predicting. And they paused their announcement to basically redo their earnings numbers, redo their reports, so that they can take in their tax liabilities, which will probably even boost it past that. So from a more aggressive standpoint, I think this really gives a good, fun, short-term candidate to trade and take advantage of these big swings that we have.
Excellent. Miss McClintock.
And also to address
Miss McClintock.
Yep.
Yeah, I was getting
know
ready to
their
put
board
that up
members
there.
own shares. I'm not saying that, but they own like 5 shares apiece. Being a little sarcastic on that, but they don't own that many shares to be considered board members. If you're wanting to be a board and you believe in your company, you should own a lot of shares of that company. They don't do that.
You know that for sure that they own very little
shares?
shares?
I've seen the numbers.
Huh?
Look up the numbers. Let me find it real quick.
I'm getting ready. Hold on. Type it in. You got control. I
can't type it in on that. I'll type it in on mine and I'll just send it over.
Okay. I think that's really kind of weird that if you're sitting on the board of any company that you don't own significant amount of shares, because Musk was going to buy, he got X amount of shares, a lot, And that's why they were saying, okay, he's going to be on the board. You don't think that the board members own anything near what he had?
No.
I don't know. I think that if you're going to be on the board of a company, that you got to own shares in it. And hopefully a lot.
Let me find it here.
Okay.
You keep talking for a little bit. And
All right.
while
So
looking it up.
I'm with Ms. McClintock on that, but I don't know the numbers. And I'm assuming that if you brought that up, that you had some kind of something that you could talk about in regards to that. In Servco. Okay, you that one. All right, so I'm just curious to know. There are several companies out there that specialize in recycling EV batteries. And Roger, if I can find some information on that, that may effectively go after what Patrick said, which I think is important from that perspective of from an environmental standpoint. From an environmental standpoint. Yeah, Twitter. I'm just really Twitter stockholders board. Okay. Twitter. All right, let's just go see what it says. Twitter board of directors, new poison pill. Twitter's board interested, not aligned with shareholders. Economic interest not aligned. I don't see nothing about top 5 Twitter shareholders. CEO Elon Musk, Twitter numbers. Vanguard, Elon Musk, Morgan Stanley, BlackRock. So it looks like outside interests have a higher amount of shares than Elon Musk. Interesting. Okay. What else? What else is helping your case, bro? Does he not have the mouse? All right. I'm curious and I need to see what you got.
I'm looking for it. I don't have it on this computer. I'm trying to find where I saw that at before.
Maybe it's that right there. All right. So Joey went and found.
Well, I see that. That's just their board members. That doesn't show the amount of shares that they own.
Events, investor resources, stock information, management committee statement. All right, so like you just said, that was the board members. Jack Dorsey's. You don't think Jack Dorsey's got shares?
He had a 2% stake in it, I believe.
Wow. Yeah, I need something from you, bro.
I think
he had
a 2% stake in it originally.
You keep looking. You keep looking, and I'm probably gonna move on. I find that hard. Now, I could be wrong. I just find that Jack Dorsey owns 2% of San Francisco-based Twitter, according to the company's 2021 proxy. Oh, scroll up. It says he gave $100 million of his Twitter stock to the staff equity pool in 2016. All right. Twitter's board. There it is. There we go. Click that. Let me bring that over. This is a Barron story. All right. Elon Musk says Twitter's board owns almost no stock. How it compares to Tesla. Now, this was on April 19th. All right. I thought it was, no thanks. I thought that was a tough thing to believe.
No, I mean, somebody posted, I'm trying to think, I saw an image, somebody made like a little diagram of it, of all the shares that all the board members hold. I'm trying to find the image of it. But yeah, I mean, it's pretty sad seeing how little people actually own of it.
I've seen 2 posts in here. Kenneth from Gaucher says total for all board is 2.6%. Ms. McClintock says the board owns that number. You see that number that's on the screen? 1.8 billion shares. So I got 2 different things here. That's the reason why I'm looking up. I'm trying to find some data.
But she's saying 1.8 billion is 2.3%.
Is that what you're saying, Ms. McClintock? That 1.8 billion only equates out to 2.37%? Holy crap. How many shares are out there? Can I say crap? Can I say that? That number is sickly low then. Holy smokes. So 1.89 billion shares is
They have
only
800 million shares out there is what we have reported, or 800.64 million shares.
I think that requires a video of some sort. I think you should do it. I think you should. That's my opinion. I can't make you do anything, but I think that information is kind of jacked up, like super jacked up, if that's the case.
So did you see that image I sent you?
He sent it in Teams.
Yeah, it comes from a Twitter post I saw that Elon Musk even commented on.
Can I take that? Okay.
But I mean, it shows the top 12, I think. And I mean, they're minuscule numbers. The highest one is 0.6%.
Wow. Look at that. Look at that. So there it is. It backs up what you said. I just thought that was sickly low.
Exactly. And that's what I'm saying is that's why I think it should go to a vote of shareholder vote, not a board member vote, because board members don't own enough shares to say that they're keeping their shareholders' best interest in mind.
Wow, that's crazy. I didn't know that.
Yeah, so
and
the
it looked
poison
like Jack
pill was done
Dorsey's
so
the
that way they can
primary
make sure they
holder
get
of
more
shares?
shares to get a buyout or get a better deal when the buyout occurs, because they didn't own any shares to begin with.
Wow, and it says 80.44% held by institutions. I showed that
Yeah, BlackRock,
Vanguard.
I think, or no, Vanguard is now the biggest owner. They
Right.
increased their stake after Elon Musk took his stake.
So he was number 2 in the graphic that I showed. He was number 2. Yeah. Wow. Can you read it now, Miss McClintock?
So
That's crazy.
That's where my comment comes from.
Wow.
Yes, the board owns shares. I get that, but they don't own very much in their own company that they're supposed to be, leading the charge for.
And Roy is right. They probably didn't pay for those. They probably were granted those.
Yeah.
When somebody owns 0.007%, they probably gave them those shares. Holy smokes. Thank you for that, man.
So
again, I just wanted to know. And Magic Trades is absolutely right. That's not enough skin in the game for them to make the final decision or to set out the poison pill.
And that's what I've been saying the whole time.
Yeah. Okay. There you go. All right. I got one more story. Too much time is being spent on Twitter. Lauren, I got this. All right. I got this. This is, again, we try to stay on top of what's going on, what people want to talk about. So one last thing, job recruiting in college. Now that people can go back out because COVID is sort of in the back seat. Air quotes. Job recruiting on college campuses roar back to life. Do you think that this could go after jobs right now, Patrick? All of the jobs that are out there for people, could this go to really help the job market?
I mean, hey, let's go try to underpay kids right out of college and expect them to already have experience.
Wow, that was you really you just go straight to the underpay part, just straight there.
I mean,
not that they can help us out. You're going straight to the underpay
Let's be
part.
honest. That's why you see, dude. If this wasn't the case, you wouldn't see a new movement in the anti-work movement coming out. This kind of thing is what's caused that kind of movement to come out, is because wage growth has been stagnant. Inflation is outpacing any raises that anybody's getting nowadays.
I'm not going to say that the raises have been stagnant. They're higher than they've been.
Yeah, they're finally starting to pick up, but not even outpacing inflation. You're still losing money. That's the part of it,
right?
So I think there's, hey, come work for us on a job that you're gonna have to live your whole life for, and not make enough to really enjoy the rest of your time outside of your job. So
wow.
I don't know. I'm a little cautious with this. Granted, I came
You
into the job market right after the 2007 2008 financial crisis. So
you sound a little salty over that. That just is.
kind of am.
All right. So those are the main stories
I know
that
the
we
struggle.
got
I've
going
been
up there. Let's go see some market action. Lauren got me feeling some kind of way right now. So let's go see some market action. What's going on in the market? While we've been on, the market has been trying to make a little bit of run. We're coming off of session highs. The Dow is falling. The composite's falling. I got 20-day exponential moving average or 20 period. The Qs have been under some selling pressure all day today. Look at that. They've just been, the tech stocks are just they're taking the brunt of all of this. I got a question, and I want everybody in here to answer, but I'm going to get your opinion on it too. Yesterday's activity, type of 1 if you think it was a dead cat bounce, and type of 2 if you didn't think so. So, Patrick, I'm going to ask you the same question. Do you think yesterday was a dead cat bounce?
No.
Okay.
I just think we need to get Netflix out of the major indexes, put it into somewhere that's more of a slow and steady kind of place, not a growth place. And you look at S&P, you look at the NASDAQ, the big major indexes are heavy in Netflix because it's a FANG stock. So it's going to mess with all the averages, and it's going to hurt the overall market because
is it a Dow stock? I don't think it's a Dow stock.
I don't believe so.
I don't believe so either. And even when you look at the VectorVest composite, which tracks the move of 9,000 stocks, it's moving down as well. So, but it did have a ramp up when the market was moving up. It did ramp up, but it's pulling back. All of everything is pulling back today. No, it's not a dead cat bounce, says Bob. All right. If you haven't watched, Patrick did a great video Monday talking about the chart of an inverse head and shoulders. If you haven't watched that, please go check that out, which could be a possibility the market's going to go higher, which the inverse head and shoulders could show the market's going to move higher. So I ask that question because I'm watching today's activity. All right. If I go put on the VectorVest composite market timing, put on the VectorVest composite over the last 3 months, I'll do this, Patrick. Talk about that inverse head and shoulder. Actually, the lines are already there. Talk about it real quick.
So yeah, inverse head and shoulders, just the opposite of a head and shoulders pattern, but just for after a down market, you look for the inverse of it. So also called a head and shoulders bottom, if you will. The pattern is not completed yet, but it's starting to show signs of potential. So that's why I wanted to do the video, get people prepared just in case. Because I've always been of the mindset, rather have it and not need it than need it and not have it.
Amen. Those are words spoken by me, and I'm prophetic. Okay.
Yeah. So basically what we're looking at here is the neckline shown on the VectorVest composite. It's around 64.25 roughly. But then you have the left shoulder here, the shoulder line, which is right here, then the head being formed here, and the right shoulder is being formed now. So what we're looking at, 2 potential outcomes from this pattern. Either we break down below that neckline there and we start to move lower, most likely we'll see new lows kicking into the market here. Or we start to reverse higher and then take out that 64.25 on strong volume. We break above that. That would be a start for a new bull run. It's going to be slow. Every single candle you're looking at is representing 1 day. So right. This could be over the course over the next 3 to 4 weeks even. It takes some time to get there, but at the same time, giving people different options or different ideas to look at to be prepared for either way. That kind of goes with our mindset of, the fact that 1, we're still in a bull market based off the overall market climate. Mm-hmm. And 2, everybody keeps talking about, a next big run going into the second half of 2022. If it breaks that 64.25 level, that would be your trigger. That shows that, hey, that's confirming what some of the big analysts have been talking about, and that's your time to buy. With all the craziness we've seen this year, though, I wouldn't really start dipping my toes into the water until we see that breakout in strong volume.
I like that idea. I do like to see the completion of that. Sonny just says, am I prophetic or pathetic? Wow.
Pro-
That cut me a little deep. Wow. All right. Scott says, think we're going to go bull heading into the summer. All right. And it looks like a couple of people, Miss McClintock really liked your video, and Magic Trade said the same thing, that he really liked your video. I think it was a great video. And I think watching it, in a live stream like right now, to just reiterate that, even with the down or mixed day today, look at the 3 and the 8. Look at the 3 and the 8 on the VectorVest composite today. It's not a bad thing. They're crossing. But I'm with you. I'd like to see it break through this level of resistance before I'm ready. And I think I'm going to do a recession video on Friday. That's what's on a lot of people's minds. And I'm going to set out the case on whether we're going to have a recession or not. And that kind of thing and what's going on. But this is going to play a role in that whole thing right there. This is going to play a role in that. So don't be looking for that on Friday. All right. Let's get to our watch lists. Let's go to your picks.
All right.
We got a few. We got as much time. Just cover as much as you want to cover. We'll do it that way.
We've already talked about ENSV. We talked about that article. Stocks just waiting. Today's a lighter day. The last couple of days for the week have been a lot heavier for trading volume. But really, so keeping informed with the electric vehicles, take a look at SEV. This is one. It was up 70% yesterday. They just finally turned a profit. Granted, it wasn't much, but it's definitely positive signs that they're starting to get to that phase where they're ready to start ramping up. And then the article I sent you, why are you moving all around?
Huh?
Why are you moving all around? Just pull up the graph.
Oh, no, because you got the control. You can do that.
All right. What is going on here?
You should have my layout. You should have a layout in there.
All right, let's just keep it simple. Take off stop. So earnings, take that off because on the one day it's not going to matter. But yeah, it's being kind of sideways here today. But when we zoom out, let's say to a 1 month, this is that big update. You put on volume here. Wait, volume. Let's go here. This is the thing that I really liked about it the most. Really, really strong volume because the company turned a profit. And also, do you have that article I sent you earlier about this one associated with it?
It should have been in here, not that one. Sigh. It's in, if I click on that, yeah, okay.
We're about to find Glenn's naughty sites on here, aren't we?
Which one was it?
The SEV is right underneath the symbol there.
There you go.
There we go. So yeah, I found this article. I thought this was interesting. Not only is the company starting to make money, but if we scroll down here, their partnerships were one of the things that caught my attention. So Scion has partnered with Valmet Automotive, the manufacturer of Scion. They also produce vehicles for customers like Mercedes, Porsche. So you have a lot of high-end or big-name car manufacturers, especially German car manufacturers, that are working with or that are using the same company. So when you get thrown in with that name, it's a speculative play, yes, but one, the company's starting to finally turn a profit, and two, they're getting mixed with some of the bigger names out there for German automotive. So that could be a decent potential going forward here. So that's why I wanted to bring it up, kind of my speculative pick here for the day, something to keep on our radar. Obviously, when you look back at the chart, jumping back into it here, you want to see it start to move higher. But with the strong volume here yesterday, it's closing in the upper 50% of that range from yesterday's trading activity. There's definitely some potential, but it still has a lot of risk associated with that potential, I would say, for sure.
Okay. Want me to close the graph?
Yeah, go for it.
Anything else you want to talk about in here?
We talked about ENSV, talked about Tesla, talked about Netflix. All of mine we talked about.
All right.
You have anything you want to talk about?
Yeah, I got.
Nope. All right, cool. Let's finish up for the day.
I am so gonna come through this wall over to you.
All right, Kool-Aid
I'm
Man.
not gonna talk about all of these.
You're gonna come through like the Kool-Aid Man?
I'm gonna Kool-Aid. Oh yeah, I'm big and fat like the Kool-Aid Man. So, all right. One that I really want to talk about is CrowdStrike. I got a news article on them. Wall Street, where is it? I got it here. Striking at the right note amid solid demand backdrop. Shares of the cybersecurity company CrowdStrike risen 11% year to date and have outperformed the broader market. This is one of my cybersecurity stocks. I did a whole video on it. And I thought that there were going to be a lot more attacks specifically against us by Russia. It hasn't played out yet. And I don't know if we ramped up by way of our cybersecurity to protect ourselves. But CrowdStrike is growing rapidly, backed by the huge demand for cybersecurity amid an increase in ransomware and other cyber attacks. Also, concerns over the hacking of government organizations and large corporations have increased amid the ongoing Russia-Ukraine conflict. So, as you know, we all got hit by that not too long ago, towards the end of the year. And it just seems like it's just growing and it's just growing. And stocks within that space have the possibility to make a lot of money, all right? Because people are looking to go to companies like this to help protect themselves. I like that they've got positive earnings, growing their earnings at a clip of 42% a year. 42% a year. Russia isn't done with us yet, Glenn. Yeah, I don't disagree with that. And that's why I'm a big fan of cybersecurity stocks from that perspective. Still a speculative play, relative value, relative safety, both below 1, but stocks a buy, positive earnings, and a nice positive earnings growth. What else did I want to look at in here specifically? I don't want to look at all of these. High Peak Energy. I like this because it's an oil play. How do I get back to where I was? Gosh, damn, I got me one of them dear new iPad thingies, and I don't know how to use it. Sigh. Oh, here it is. Shut up, Patrick. Because I know you're finna say something.
Joey to the rescue.
Joey's sitting over there. He's not even paying me no attention. He wasn't even trying to help me. That sucks, bro. You wasn't even trying to help a brother out.
You were there doing it in the corner.
Why is High Peak stock up today? This is a Kramer story. That Kramer liked Devon Energy. He liked High Peak.
Roy, this one's for you.
What's one? Whatever. Red Bull gives you wings. Yeah, okay. It's a stock shooting up on a positive endorsement. Specifically, Jim Cramer thinks it's a mid-cap stock that could be breaking out, blah, 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 blah. Well, let me take a look at it. That's
if
what
it's a Jim Cramer stock,
says.
I already say pass on it.
Well, hold on. It's got positive earnings growth. Again, another speculative play in that relative value and relative safety are both below 1. It is in an uptrend. It is an oil play, so it is, from my perspective, something to still keep your eyes on, even though it's a speculative play. There's a lot of better stocks in the oil space than this, but from that speculative play that might have some good upside, it's a buy recommendation. It might have some good upside. This is something I want to keep my eye on. And last one I'm going to look at is Zim, because what do I have for them? Zim stock rose on Wednesday, reaching a new high, but finished barely below and added add-on purchase mark. Earnings of $14.17 per diluted share were announced by the Israel-based container freight fleet company, exceeding the FactSet analysis of $13.19. So they blew that out of the water. Revenue increased by more than 150%. Good googly muggly. All right. So a lot of people were jumping on were jumping on Zim because of the big dividend that they paid out. I actually wanted to just keep it as to be a owner of record so I can get the dividend, and I did. But look at that, $21 earning per share of the stock that's trading at 59. 45% growth. I still think that it's got some good upside. It's got a relative value of 1.96. This is more of an aggressive play than a speculative play, but it's still a sell. I want to go take a look at that graph. Let's go take a look at it. Put this on a 3-month graph. I like that where's the earnings play? Earnings hasn't come out yet. Earnings will be coming out if they haven't already.
Put on the dividend,
watch
though.
it. I do, huh?
Put on the dividend.
Let's go look at the dividend. The dividend paid. Yeah, and then the stock's price went down by a lot because they had like a $17 on top of what they had. I think it was $19 altogether dividend. 19.
I mean, this was the hot stock for a little bit, but
Yep.
until I see signs of some actual turnaround,
Well,
I'm going to stay away from this one.
The whole space is moving. The whole transportation ship is moving. So all I'm saying, it is a speculative play. It is basing. It's leveled out, started moving up. We'll see what happens. We'll start seeing what happens. All right, those are the only real couple, except for CTRM. I got out of it, I think. I think I did. I made about $1,000 on CTRM, and I got out. Where's Mark? Mark's not here. Mark Norton's not here. So hold Tesla through the earnings today or sell, asked Roy. Hold Tesla through the earnings today or sell. What do you think?
I'm going to say hold Tesla through the earnings today.
TSLA. So did I not put one in there?
Not financial advice, though. Do your own investing or do your own research.
Yeah, I agree with Patrick. I totally agree with Patrick. You know what I do like? Let's see what I do like. Where's relative safety? Let's go see where relative safety is. That's our indicator. It's above 1. The stock's going to have a high probability of meeting or exceeding its earnings. The only thing that's going to hurt it is forward guidance. We don't have an indicator for forward guidance, but Tesla seems to continually, by way of relative safety based on that scale between 0 and 2, continuously beats or exceed earnings expectations. Let's go put on 6 months. Let's go put on
And
earnings.
you got the stock split coming up as well with it. Did they already do the vote?
I thought they did. Didn't they do that already? No?
Because I know that they were going to have to leave it up to shareholder vote.
Oh, no, they didn't do it yet.
Did they do the vote, or are they waiting to announce the vote?
The last split I got is in 2020.
Yeah.
Yeah, they haven't done it yet.
Yeah, because the article that came out like a month or so ago was saying that they were going to be leaving it up to the shareholder vote to vote on whether they should do another split. And I didn't know if that shareholder vote was going to be coming, for like the annual shareholder meeting, or if they were going to be waiting until the earnings call to announce what the results were.
Gotcha. Listen, in regards to should you buy and hold it now, and I'm with Patrick, that's all up to you. I am going to use the power of the VectorVest software to tell you that the company consistently and predictably beats earnings. The thing that will hurt it is if they don't have good forward guidance. I don't know if the Shanghai shutdown is going to affect their forward guidance, but that's not the only gigafactory they got.
Yeah, I think the Texas one is more important to keep an eye on than the Shanghai one.
I agree with that. I totally agree with that. So I like the high potential of it beating earnings. I just don't know what forward guidance is going to say. I don't know how the shutdown is going to hurt them or if it's not going to hurt them. So, and Patrick is also right. It's all about the sales of the cars. Can they prognosticate that they're going to sell more cars? The sales keep coming out, good, better than good, like great. Can they keep that going? That's going to be the question. If they can, then Tesla will keep going up. If the forward guidance says something different, it's going to affect them adversely. But if I'm looking at it from this recent high, the stock, you agree with this, Patrick? Sitting a little bit of a downtrend from the high?
Yeah.
It's got lower highs. All right, so
it's got lower highs and lower lows, but
well, no, maybe not.
Well, right now that's not really considered a lower low. I mean, a higher low because it technically hasn't started taking out the previous high yet.
All right,
so it's still pulling back. It would have to drop significantly though to hit that to make it continue the pattern of lower lows.
All right, so that's the answer to your question. I think that. You got to look and see what the news says. There's nothing I can say. All I can say is from an earnings perspective, they should beat. From a forward guidance perspective, I don't know. Can you put just me and Patrick on? This was good conversation, except for Lauren said we talked about Twitter too much. listen, we tried to talk about what was hot in the market. This is afternoon market action. What's happening today? You know, so that's what we're going to do. And we're going to continue to do it. And hopefully we keep your attention. Hopefully we keep your attention. Right, Patrick?
Yeah, hopefully. If we did keep your attention, punch that like button as hard as you can.
Amen to that. Amen to that. All right. So, and if you haven't subscribed to the channel yet, please take a moment, hit that subscribe button, hit the bell icon so you'll be alerted. So every Wednesday at this time, Patrick and I will be here to get, you know, something. What the cool thing is, we don't have to agree. That's great. I like that. We don't have to agree. You can hear two opposing sides and do your own homework. But we're here to educate you, not to pump up nothing. That's not what we're here to do. We're here to educate you and let you know what's going on, right? I signed off last time. You can sign off today, Patrick.
All right. Put me on the spot here, I guess.
You got to come up with something fantastic.
Thank you all for tuning in. Don't forget, as always, tomorrow, Thursday, is a big day here on our YouTube channel, also on our Facebook page. I have our mobile coaching session where we're going to be looking at some lower dollar stocks tomorrow at 11 a.m. Eastern. And then Glenn has his trending Thursday at 2 p.m. Eastern. So make sure to be around for both of those. Great content coming out every single week. So if you want to see how to become a more successful, faster, smarter investor, make sure to come hang out with us tomorrow. Big day for different content that we have for you guys. Until next time, though, thank you all for coming and hanging out with us. VV Nation, by far the greatest community here on YouTube, also in the financial industry. So glad to be a part of that. So, Glenn, do you want to say thank you or bye?
No, man, that was great. I put you on the spot. You did great.
All right, so
I'm so proud of you.
He's getting smaller and smaller. We're tuning him out now. So thank you all for coming around to my afternoon market action. My name is Patrick France. Toodles.